In today's video, we are talking about the pound, which is trying to break out from a descending broadening wedge here on the intraday charts. But I'm going to show you why you've got to be careful with these markets here over the next 24 hours. So first of all, we do have the US presidential election occurring right now. So over the next 24 hours, I said this the other day, but you've got to be careful over the next 24, even 48 hours from now, depending on how long it takes for the votes to come in for the next US president. Because typically in markets like this, you tend to see the US dollar become very volatile, and I don't think this will be any exception. So if you look here, we have the pound coming into this support back here that we talked about right around 129. This was also our target following the breakdown below this area back here. So if you'll remember, I talked about this breakdown and looking for shorts up here around 130.50, and we got the target down here right around 129. So this area down here was always support for the pound. And you can see the reaction from down here. You can also see a nice descending broadening wedge here, which tends to serve as a bottoming pattern for a market that has moved significantly lower off its recent highs. Now, again, though, you've got to be careful with a couple of things here. The first one is the US presidential election, and the second one is this 130.50 area. So if we go toward the daily time frame, you can see this high from right back here. We've got this closing price, these lows through here, and also these recent highs. So this is going to be key resistance for the pound. So if you are trying to long this market, you are longing right into resistance, and you're also trading on US election day, which is not advisable. So right now, guys, I do think this one is going to require a little bit more time. If you were able to long down here into this area below 129, I think that was a great entry for a move back toward 130.50. But from now, I really think that it is best to wait for the volatility that we are likely to see here over the next 24 hours to subside before you start looking for a potential trade here. Now, what I've talked about recently is the fact that anytime you get a market that moves lower like this in this kind of fashion, right, in this choppy fashion right here, you get a lot of liquidity that builds up above these recent highs. So knowing that it's US election day and knowing that we tend to get a lot of volatility for the US dollar, what we could see here from this market is a move above these highs, okay, and then potentially a close back below. So a sweep of these highs back here, followed by a close back below 130.50. And the reason I think that could be likely is what the DXY has done here over the past month. So if we take a look here at the DXY, and by the way, before we move on, guys, if you are looking for a broker you can trust, I've trusted these guys for 7 years. You can trade Forex, crypto, commodities, and indices with them. And for a limited time, if you use my link in the description of this video, they are going to give you a 30% deposit bonus. Plus, if you deposit $1,000 or more, I will grant you lifetime access to our VIP group. So check out the link in the description of this video for Blueberry Markets. Sign up with them today. If you're on the website, scroll all the way down and click on that broker link. So looking at the DXY, this is why I don't really favor looking for long-term buys on the euro or the pound. So the DXY was moving within this channel. We've talked about this for months, really. And you can see where this broke down right back here. Okay, so this broke down through here. We got a falling wedge into this area. Shorts got squeezed in October. But the notable thing here with the US dollar index was the fact that the market closed back above the bottom of this channel. So this right back here was significant, in my opinion, and signals a fake out below this. So typically when you get this right here, okay, in this kind of context, it is a bullish formation for the chart. So what I've said recently following the 102.60 reclaim was 104.50 was our target. And you can see why from right back here. All right, so this was our target up here, and you can see where we are getting that pullback from this area. So I have maintained, a short-term bearish bias on the DXY while it's below this area. But as I've said, I really haven't favored looking for US dollar shorts simply because of what the market did back here, closing above 102.60. Now, we do have this area back here right around 103.20 that could come into play here over the next 24 hours. And this extends down here toward the trend line, which is just above 102.60, maybe right around 102.70, 102.80. So this entire area down here is going to be critical for the dollar over the next 24 hours, to the point where if we do get a move into this area, I would expect a very aggressive bounce from here. And this is why I'm saying with regard to the pound, when you look at this right here, okay, a lot of people are going to get bullish on this, but you've got to consider 130.50 and also what the DXY is doing to the point where we could see these highs swept and then the market just close right back below. Okay, so I could be wrong on this, but I don't love the idea of, looking for longs here below resistance. And I also don't like the idea of looking for US dollar shorts really across the board, as long as this market is above this trend line down here, right around 102.70. All right, so that's kind of the plan here that I'm looking at for the US dollar. Again, this area is going to be critical support. I would expect an aggressive bounce from here. I do think buyers are going to try to defend this area. And the same thing for the pound. If we look at this, knowing these markets are typically the inverse of it. I mean, the euro more so than the pound, but the pound is likely going to follow that as well, the inverse of that. So we could just see these highs swept up here and then, potential reversal from this area. But again, I really have to stress the point, guys, that if you are trading right now, you are playing with fire, because we are going to see a lot of volatility here over the next 24, potentially even 48 hours. So I think this is one of those cases where it's best to just stand aside, wait for the market to sort itself out. If we're going to see liquidity sweeps, let that happen and then trade the aftermath. Subscribe to the channel and click the bell for notifications. Don't forget to join us in VIP. See the link in the description of this video for 90% off lifetime access. Or if you're on the website, click on that join VIP link. Be careful with the upcoming volatility, and I will talk to you again tomorrow.